I think we're all trying to figure that out.
What's your best guess at this point? And how much of the obvious playbooks, whether or not you're bearish on things that require human-to-human contact, how much of those are played out? What kind of opportunities left there?
Well, look, I think it's definitely upward sloping. I think the question is how long it takes for people to get back to work and what that looks like. You talked about the human-to-human element in certain sectors, so there's different letters for certain sectors right now. So I think when you think about theme parks, sporting events, things like that, retail where you have to have face-to-face contact, I think those will probably take longer to recover. But there's definitely going to be bifurcation in this market. Some sectors are going to perform and some are not going to perform. So you really need to pick your spots as an investor.
And some of the spots that you've looked at include Charter and Northrop. You want to talk about your thinking on those two names at least?
Sure. So I talk about Charter in the book. That's an investment that I've been involved in now for a little over 8 years when the new CEO, Tom Rutledge, got there. And I think what we've realized, through this crisis is that the residential broadband network is very, very important. And we're all running on our residential broadband networks right now, and it's really become critical infrastructure. So Charter has access to capital. They're growing their broadband subscribers. And I'd say, when you think about the way we think and act and spend our time, a lot of it is online, whether it's for work or whether it's for entertainment. So I think they have a long runway ahead. I think overall, the market in general is, I'd say, bearish on cable because they're confused about what's happening with the video subscriber landscape. And while a company like Charter may be losing video subscribers, and last year they lost about 480,000 video subscribers, they gained 1.3 million broadband subscribers, and they're growing ARPU. So, like Charter a lot here, you definitely have to focus on balance sheet as well. And despite the fact that Charter has 4.5 times leverage, they have access to capital. They just did a split-rated deal yesterday. They raised about $3 billion at an average coupon of around 3.3%. That's amazing in this market. And I think if you look at their cash flow generation, they'll do around $20 billion or more of free cash flow in the next 3 years, and they only have $10 billion of debt due in the next 3 years. So, look for them.
Well, all that, Josh, all that one reason why the stock has actually performed relatively well, flat for the year. Before the crisis, we spent a lot of time, though, talking when it came to Charter and others, of course, who provide cable services, the threat from 5G eventually, being able to actually provide a broadband service wirelessly into the home. That's still out there, even if it has been perhaps delayed in some ways as a result of what we're dealing with right now.
Right. So spent a lot of time on 5G, and we were hearing about this even 5 years ago. I think the issue is, what do the standards look like? You talked about the delay as well. It really is overbuilding the existing cable structure and requires engineers and people on the ground to build that infrastructure. And I think overbuilding never really is a good value proposition for, say, a Verizon or an AT&T. We certainly saw it with Google Fiber in Kansas many years ago. And Google, who has, unlimited liquidity, and they could spend a lot of money to hire the best people, they couldn't replicate what cable was doing. And so let's say 5G internet existed today. Well, one, how does it work? It can be cumbersome. I've seen a lot of videos on how it's tested and how it works. And then it's got to be a good value proposition for the customer. It has to come at a cheaper price, and it has to be a better product. So I think 5G, the way it's going to really work is it's going to be great for autonomous driving. It's going to be great for smart cities. But in the near term, I don't see it as a replacement for the traditional cable business.
Josh, one of your tips and strategies in your Investing Like Pros points out that a lot of the returns were generated coming out of the financial crisis by buying out-of-favor businesses. Wondering how willing and how far you're willing to take that strategy right now. Carnival Cruise, for instance, CEO Arnold Donald joined us yesterday, said that 2021 bookings were looking strong. Is that the kind of out-of-favor business that investors should be looking at?
Well, for me, I would look at a company, say, like an Aptiv. I talk about Aptiv in the book. They have an amazing CEO, Kevin Clark, and they're really aligned with secular growth opportunities in automotive, tied to autonomous driving, tied to safety, active safety. And a lot of the features in the automobile where Aptiv is aligned, many years ago were like to haves and now they're must haves. And I think a company like a Carnival, which I'm not involved in right now, you got to think about the human factor. And we talked about that earlier. Are people going to be willing to go on cruises? And what does that look like? Did I lose you? I think I lost sound.
Joshua, thank you.
Yeah, I think I
Joshua
lost sound
Pearl,
for a second.
co-author of the little book of investing. Appreciate it very much.